So I just came across a video on SEP-IRAs, which are typically used for self-employed individuals. And this video came from a pretty big account, a financial influencer. And I feel like it's my duty as a certified financial planner to set the record straight on this. I don't want to cause any problems. I fully respect this person and I love their content. But this is something that I just want to make sure people don't get wrong because it can be a very expensive mistake. Let's take a look at what this person has said about SEP-IRAs.
So easy math, let's say you have $100,000 worth of 1099 income. Let's pretend that maybe I have $10,000 in legal fees and other business expenses. So the net business income for the LLC for the year, call it $90,000. If I'm paying a 30% tax rate after marginal federal, state, self-employment tax, that's going to be the tax bill on that 90K. But what I can do is find 25% of that net business income, 25% of my 90,000, and I can invest it in a SEP-IRA. Now, you can only make
Okay, so this is the first point that I need to make on this and make it very, very clear. So Money with Katie described this video as somebody who is a 1099 contractor and they have, self-employment income because that's what 1099 income is. It's very clear that the number 25% of income is thrown out there a lot. But that is in relation to employees, meaning if you have W-2 employees working for you in your business, they can get 25% of their income contributed from you as the employer. But what she's describing is a self-employed 1099 individual. And that is going to be a completely different calculation that has to take into account a few different things before you can make that calculation to find out what you're eligible to contribute to your SEP-IRA. So she does the calculation as a flat $90,000 of self-employment income that this person has made and just goes straight 25% off of that $90,000 to get you to that $22,500 as the maximum that you can contribute into your SEP-IRA. That math is extraordinarily wrong. And if people do that and they are self-employed 1099 and they start just taking 25% of their net business income and contributing that into a SEP-IRA, just as the math is that she described in this video, they are going to end up with excess contributions that were ineligible or non-deductible contributions, and that is going to incur a penalty, aka tax. The way the math works for a self-employed individual who doesn't have employees or they're contributing to the SEP-IRA for themselves, you cannot put 25% of your net business income into a SEP-IRA. First, you have to adjust for the deduction for self-employment taxes that solopreneurs are able to take. And second, you have to use something called a contribution rate that takes into account your deduction that you're getting for contributing to your SEP-IRA. And so what happens is the real percentage that you're doing off of your net business income minus the adjustment for the self-employment taxes, which she did not address at all, that is going to be the number that you calculate 20% off of. So it's not as simple as just taking that net business income, taking 25% of it and sticking that into a SEP-IRA. If you do that, you're going to be in big doo-doo. Now, she addresses in one of her replies in the comments that if you are a solopreneur or self-employed, that the amount is going to be 20%, not 25%. But that's not exactly what she's saying in this video. In this video, she's saying a solopreneur can take 25% of net business income. Not true. Got to adjust it properly. It's very nuanced, and that was not addressed, and I understand why, because it's confusing. But I think that giving the wrong calculation like this is sending a lot of incorrect messages to her followers. Let's go on.
Now, you can only make employer contributions to a SEP-IRA, but good news, if you're self-employed, partially or fully, you are the employer and the employee. So I'm going to put my $22,500 in this SEP-IRA, and now I owe taxes on this amount, not this amount.
And what she's saying is her 90K of net business income minus the contribution to her SEP, which is 25% of the 90K. Again, that's an incorrect number, but we're going with it. What she's saying is after accounting for that, you're only going to be paying taxes on $67,500 instead of paying taxes on the $90,000. Now, here's where, again, the nuances come into play, and this is very, very important that you hear this. Contributing to a SEP-IRA does not reduce your self-employment taxes. She addressed this in the beginning of the video that she's getting a 30% tax rate as an assumption, and she's including self-employment taxes in that tax rate. So she's saying, guess what? If you contribute to this SEP-IRA, you, instead of paying taxes, including the self-employment taxes on the $90,000, you get to subtract the $22,500 and pay taxes only on the $67,500. This is wrong because basically what a SEP-IRA contribution does is it saves you on federal income taxes, but it does not save you on self-employment taxes. So contributing to a SEP-IRA saves you nothing on self-employment taxes, only on the actual federal income tax side. I understand that there are a lot of nuances in taxation and financial planning, and unfortunately, a lot of these social media influencers in the finance space do not know these things, or they do not speak of them to their audience in a way that they should. I like Money with Katie. I actually think that she's got a great personality. She's really funny, and I really enjoy a lot of her takes that she has. But I have to say that, you know, when I'm seeing all of these financial social influencers out there, a lot of them are not professionally trained to know these nuances to the degree that others are. And the unfortunate fact is that the people that know these nuances aren't doing enough content. And so people are going to be following this advice, even though she's saying, get a CPA to check all of this, make sure you get a CPA. She's saying that. Unfortunately, a lot of people won't. They don't want to pay for a CPA. They want to do it themselves. And if TurboTax doesn't catch the mistake for them, they are going to end up really screwing themselves by following this blanketed advice that doesn't address the nuances of that 25% SEP-IRA contribution actually not being 25% at all. And if you do that, you're going to end up paying a penalty. Just because somebody has a lot of followers on Instagram or TikTok, just because somebody is associated with a very, very popular, respected publication, that doesn't actually mean that they are giving the correct, best advice on social media. So my goal, as always, is to bring up these nuances so at least you're aware of them, to bring them to your CPA, or to understand that if you run into this in TurboTax, don't ignore it when you look at your SEP-IRA contribution showing something different than 25% that you've actually put into your account. Don't ignore it and just let the money sit in there and not question it. Get professional help if you can't figure it out. But I just really get heated and frustrated when I see this advice out there that just simply isn't correct, and it's giving people the wrong idea. So they're going to do tax planning based on incorrect information, and they're not getting the deductions that they actually think they should be getting, and so on and so forth. This person will, in fact, be still paying self-employment taxes on the full $90,000 of income in this example. It will not save on that. Federal income taxes, sure. Self-employment tax, no. That's where an S corporation comes into play, and we can get into nuances there too if we want later. There are plenty to be had there too. Please be safe out there and, you know, watch who you're listening to. I respect a lot of these social media influencers that are talking about personal finance matters, but when it comes to, you know, a lot of it, the training just isn't there. The tax side is extraordinarily complex. That's all I got, finance fam. See you in the next video.